All right, so really excited for my guest today. I've got a good friend of mine, Sabrina Bainbridge. She's an associate director of impact investments at Spring Point Partners. What I really like about her is she leverages her international impact experience and background in designing incubator programming and support for their impact first impact portfolio. She also loves camping, kayaking, and volleyball, and I'm sure I'm going to learn a lot more from talking to you, Sabrina. So thanks for coming on the show and excited to really just unpack, number one, more about your life, your career, and just kind of the venture and private equity industry.
Thanks so much for having me, Joel. Really excited to be here today.
Well, thanks for coming and excited to hopefully meet up when you come out to New York. But why don't we, for the audience, just talk a little more about where you grew up, what you studied, I always ask, where did you think you would be? What industries did you think you were kind of interested in? And if it was already being an LP and already being in asset allocation, that's cool. But sometimes I get surprised and I learn, what people wanted to do. You mentioned volleyball, so maybe you wanted to be a professional volleyball player, and maybe you still are. But let's hear from you. Tell me a little bit more about, where you grew up, where you studied, maybe the subjects that you studied, and if it's okay, I'll probably pop in with some, comments or questions as well.
Yeah, perfect. Feel free to jump on in. And sadly, my height impacted my volleyball career long term. So it was never gonna be a collegiate player or anything like that, but really enjoyed playing and still do. I like to play sand now, which is great.
That's always fun.
Yeah, so I grew up in Oklahoma, Oklahoma City. My parents are both originally from Chicago, so very Midwestern. Spent a lot of time going up and down, driving through Kansas, all those things. But grew up in Oklahoma City and went to Oklahoma State for my undergraduate degree. There, I studied physiology and microbiology with a minor in history. I was always just like a really curious, loved solving puzzles and I still think STEM is a really great education and can take you in so many different ways. I know we've bonded over this around how, it's just a really great training to think more analytically and question, which I think serves really well for finance degrees or careers. But no, I never thought I'd work in finance, never thought I'd be an allocator. My mom actually has been in commercial banking my whole life, and I kind of grew up in a house that was very financial forward, but was like, oh gosh, I will never do that. That's what mom
Sure.
does. But really fell in love with it later in my career, which I can talk
Hmm.
through. But yeah, growing up in Oklahoma, it's a state that has a lot of educational barriers. And as I was going through my STEM degree and really falling in love with science, realizing that that wasn't the reality for a lot of my fellow Oklahomans and decided to join Teach for America. So I did Teach for America, taught high school science. I taught biology, physics, chemistry, kind of the whole gamut, and loved it. And through working in those communities, really, though, that was the first time I really saw the issues with financial access and financial inclusion in our
Hmm.
country. And growing up in a house that was so financial forward and seeing, the pain points of when financial markets are inefficient and also just aren't serving customers effectively, became
Sure.
really passionate about it. So after my experience with Teach for America, started working with ed tech startups and fell in love with the venture ecosystem and went to business school and have been working in investments ever since. So prior to joining Springpoint, I was working at Plan International, which is an international nonprofit, helping them to develop out their investment thesis for East Africa, as well as doing some international consulting across the board. So did some projects in LATAM, India, Europe, US. So it's a really fun global exposure and getting to learn lots of different markets quickly, but really was passionate about moving back into the US and started at Springpoint about 2 years ago. And the majority of my focus here is around our emerging manager strategy, overseeing that portfolio and helping to make sure that we're bringing new funds in as well as supporting our current funds.
So, fun fact, I used to go to Oklahoma a lot for one of my previous jobs. So I used to work for the DoD. So I would go to Tinker Air Force Base. I don't know if that was near where you
Yeah, not
went to
too far.
school. But I mean, I remember there was kind of a growing, tech ecosystem there, and I think with the Air Force Base, there were government employees and there were people, in the DoD that were kind of building their tech skills. So I don't know if you've been there recently, but I think your family's still there. So like, how has Oklahoma evolved in the last maybe, 5, 6 years? Do you see a lot more venture activity? Obviously, they have some really big family offices there, and there's a lot of institutional activity there. But what are some of the observations that you've seen over the years, maybe going back there?
Yeah, it's changed quite a bit, and my family still is there. So I have
Hmm.
one of my brothers is in Tulsa, and the rest of my immediate family's in Oklahoma City. So it's really fun to see how much it's changed. It's completely transformed, especially Tulsa. They were really smart in building a lot of infrastructure for remote workers pre-COVID, which has paid off
Hmm.
very well. Yeah, so that's been really exciting to see. And there's a ton of great nonprofits and accelerator programs, as well as family offices that are really building out the venture ecosystem in Oklahoma. So it's been fun to see lots of development, lots of changes. Also, just the restaurant game there is always improving. It's always been a
Hmm.
great food scene, but it continues to get better and better every time I go home, which is fun.
What's kind of a staple, like, Oklahoma dish that, people call out? So when you go to like St. Louis, you think of like the toasted ravioli, right? So is there like a staple Oklahoma thing?
Oh, what a great question. I think it very much depends on who you ask.
Sure.
I would say I usually go for okra and fried chicken is my
That
like
sounds
going
good.
home. Yeah, it's pretty good. And there's something about it there that people just know how to do it right.
Hmm. Absolutely. Well, switching gears, talking about Spring Point partners, what are some things that you look for when you partner with people? We talked about this, before the call, just really building true relationships. I think when fund managers or community managers can do something that's actually fun and, something that's activity based, that always helps. So in those activities, what are things that maybe stand out with someone that you want to work with?
Yeah, I think the number one thing we're always looking for, I'm trying to think of the more businessy way to say this, but people who aren't jerks, I guess. So people who
Hmm.
are operating with integrity and compassion in the way they do things,
Sure.
but are really smart and thoughtful and are honest and are willing to give the difficult feedback when needed. I think about these things a lot with all relationships that I'm making, whether it's a manager we might invest in, another LP that we would collaborate with, kind of across the board. So I think those are things that we're looking for, but also people who are just want to have, like take this work really seriously, but also see
Hmm.
and find the joy in it. We're going to be hopefully together in business for a long time. Like these are multi-decade partnerships. So we want to make sure
Sure.
that we're both seeing mutual value outside of the checks that we're writing. And can find joy in the work that can be really difficult and challenging. I think we're seeing that right now. It's a very cyclical asset class in particular, especially when you're looking at the venture space. And there's going to be ups and downs. So people that you want to be on that ride with.
Yeah, coincidentally, the last couple podcasts and the last couple weeks, I've been talking to a lot of allocators, and a common thread that I'm seeing, I would wonder what your thoughts are around this, but like, a lot of the allocators are looking for managers that are focused on a concentrated approach. If they want diversification, there's so many other assets that they can get access to, right, to kind of mitigate their risk. So they're looking for people that, have heavy conviction, have a concentrated strategy so they can hopefully get outsized returns. But was wondering kind of if that's something that you're also interested in as well, or do you try to balance that out with like some managers that also have a diversified approach as well?
Yeah, we have both in the portfolio.
Hmm.
My preference is for the more concentrated, with the
Hmm.
caveat of what you're doing around that. There are a
Sure.
lot of risks with a more concentrated portfolio strategy. So if you're doing that, what is your investment style? How are you showing up for your portfolio companies? So those are the things that we'd really dig into in diligence. If you say you're an active investor, I want to see lots of evidence of that. That's through how you
Sure.
underwrite, like in your memos, when I'm doing reference calls, like do your founders actually know you? How
Hmm.
active are you? Are you doing the value adds that you say you will? Because otherwise, I think the concentrated portfolio approach is actually really high risk.
Yeah, absolutely. When they talk about access, what are some threads that you're seeing? So when somebody says, "Oh, I have access," are the successful people that have access people that just have relationships, or do they have some kind of unique niche? Like, maybe you're a scientist or something, and you graduated from MIT, so you have kind of this unique community that would give you a moat. So I think, because you've talked to so many managers, right? So they all talk about proprietary deal flow or access, or they all have like a venture scout program where they see thousands of startups every month. So what are some of the, things that are less interesting to you, and then maybe just kind of something that maybe piques your interest more?
Yeah, it's a great question. Yeah, we've seen hundreds of funds this year alone, and we're a quarter in. So it is very competitive out there, and I really feel
Hmm.
for the managers. It is really hard to showcase differentiation in quick conversations with LPs when there is only so many ways you can slice and dice portfolio construction and how
Yeah.
you find and source. I think to your question though, specifically around, proprietary deal flow, I was wondering when that word would come up. I think it's a little bit of both, right? Like I think you have to have founder access and have deep connections and have a really strong network, but then you also need to have a value add, especially if you're doing, if you're a small fund, fund one through fund four. You need to have something outside of your check because realistically, there's going to be somebody that can elbow you out and have a little bit more, have a little bit more financial power than you do. So hopefully we're looking for people who have both of those things. And we're looking for, founders that will fight for you to have you on their cap table. And that means you usually have strong other, co-investor relationships.
Mm-hmm.
You've got strong, folks that maybe can be outsourced or, that's the word I'm looking for. Fractional CFO, CEO, like all those types of things within your network, but also have that value add that you can provide that's a little bit more direct. The thing though that we really tried to dig into, and this is where when we're underwriting emerging managers, we'll look at a fund one or a fund two. Where are you coming from and what's your background? Like if you're a former operator, I expect you to have very different skill sets in areas of growth than if you're, somebody who's a blue chip spin out or has been doing investing for quite a long time. And neither of those are bad profiles. I'm happy to
Mm-hmm.
either. But that's where I feel like the major differentiation and what value you're going to have to founders comes in.
Yeah. What are ways that you've seen, founders kind of differentiate? I guess what are some of the factors that have made, maybe some of the investments, you don't have to mention the name, but what was the X factor that kind of got you over the line with maybe some of your favorite managers? And again, you don't have to mention them if it's confidential right now.
Yeah. I'm trying to think through. I do think it takes time. So that's
Mm-hmm.
one thing I will fully own is it takes a while. We want to be, when we're writing a check, if we're doing an initial investment, we're writing that check with the intention that we would hopefully be with you for multiple funds.
Sure.
So it takes time. And I know that can be really frustrating, especially when you're on a fund one. I can't imagine how, sick, just stuck you feel, cart, horse, insert whatever analogy, chicken, egg, how frustrating that must feel. But we probably get to know folks over 6 to 9 months before we'd even consider going to diligence with them.
Mm-hmm.
So there's lots of
Sure.
kind of informal things that come through that, to the point that I was talking about earlier around like, are you a compassionate but honest and analytical steward of your capital? That takes time to build up evidence over. Specific things that are a little bit more helpful. I think like, does your data room, is that full? Do the artifacts match each other? Like one of the biggest red flags for me that I'll quickly say a no on is if you say you are a very active investor and your memo is a page, like that doesn't
Mm-hmm.
showcase, the level of an active diligence that you need to have in order to have a really concentrated portfolio. The things that I love though are when you see those things come to match, right? When you
Yeah.
see like, oh, I have an active approach, and then you look and you see really robust, thoughtful diligence. You do a reference call and, from a co-investor, an LP, and they're just glowing about the relationship that they've built with this manager over months. You see strong
Mm-hmm.
evidence of LP relations, even if you're just starting out your fund, the monthly updates that you're sending out your LPs, like having those things in your data room is really helpful. Or adding, I love being added to those. And if people are willing, just see how you're building those relationships with your LPs. I think that's one of the biggest things for us is how are we going to be in business together? So if I'm thinking through like kind of the outside of the normal things, the thing that tips us over is evidence that you want to build a relationship with us and that we can add value to you outside of your check and that you'll also add value back to us because we want to learn from you as well. We actively adapt our technical assistance and our support offerings to our to our GPs based on the feedback that we get from them. And if we don't have the time or the relationship where you can give me honest feedback and we get to know each
Mm-hmm.
other, we're never going to get better as LPs.
Sure. That's good feedback and advice for LPs as well, right? If we were to kind of give some advice or wisdom to fellow LPs, so I think providing some type of support platforms and systems, whether it's just, manual systems where you're just kind of just spending time with them, or if you have some technology or platforms that you can offer that's maybe extended from what you have, I think that's really huge. And then I think the other piece is just being disciplined to be patient, because to your point, I mean, just getting to know somebody for 6 months, if you, depending on your investment committee and depending on the leadership that's at your firm, there may be people asking you, hey, how come it's been 6 months since you haven't, taken a deal to IC or something like that, right? So, but I think, balancing that with the discipline to take time to make the right investment, I think is a good blend when you're looking at both ends of the spectrum.
Yeah,
So,
and the point you just made too, I think, as a GP, really understanding LP timelines is also really helpful. When you're at
mhm.
that point that you just mentioned around 6 months and things like that. LP timelines are not as agile as how most venture funds run their pipeline. So it
Yeah.
takes a little bit of time, and people are thinking quarterly. So you need to have those conversations and just be patient because it depends on when you're going to get on the IC calendar that are not as frequent as most of the GPs are
Hmm.
hosting.
You talk about the data room. So, what are some other things from the infrastructure standpoint that you look at for like emerging managers, right? So, emerging managers may be using Google Docs. We had a tech partner named Pliancy. They did a really good job. They actually came up with like a due diligence checklist for like the tech stack. And I think they work with more established managers, managers that are probably on like fund three, fund four that have a lot more sophisticated cybersecurity requirements, because they got to go through the DDQ. So, would love to kind of just think about the different flavors of, how you look at the infrastructure, because that obviously is a risk factor as well, right? If someone is using a clunky system, or if they're if they're doing their fund admin in Excel versus having like an actual fund admin, that's also a huge different level of professionalism. There was a fund to fund that shared some advice, I think, a few months ago, and it really stuck with me. So, even if you're an emerging manager, your LPs, when they log into a portal, they need to feel like they're logging into JP Morgan, right? So I think that kind of standard and that level of professionalism, even if you're starting out, that's kind of the reputation and kind of the brand that you're building. So would love to, kind of hear your thoughts on like, just kind of the graduation points, right? You're a fund one. What's kind of like the things that you expect that, don't really shock you. And then now as you're getting to like maybe fund three, it's like, hey, you know what? Maybe you need to have, this level of cyber insurance, or like maybe these type of portals that are a little more institutional grade.
Yeah, that's a great question. And I think that goes across lots of things, not even just the data room, but the way we think about things is we have, pretty strong criteria that we want to see at different levels of where the firm should be at.
Sure.
And we want to make sure that we're holding people accountable to where they can actually be, right? Because all those
Hmm.
things you mentioned is like, oh yes, but those are so expensive.
I know.
And working capital is a real issue for, emerging managers who, for a lot of them, are funding these, bootstrapping these businesses.
Hmm.
So that's really challenging. So our goal is always to figure out, what is the level of what they have to be at right now and what is going to actually allow them to have fundraising success and traction with us and with other LPs versus where we want to see them go. And do they have the roadmap in order to get to that long-term plan, right? If I'm talking to somebody, maybe they're in a Google Doc right now or, in Drive, and they've never even heard of some of these things, like if they can't tell me like, oh, once we hit this milestone, we would be purchasing X, that to
Sure.
me is the bigger red flag.
Hmm.
I think there's some creative ways to still make sure you have secure data in more cost-effective ways at those early stages. But just more broadly, outside of data room, well, the three kind of big buckets of things that we're looking at, and this isn't like anything too crazy, but we're looking at team, firm, and fund. And where are you at fund one, fund two, fund three, fund four?
Hmm.
And very, very different levels of things that we're underwriting for those funds. But I don't think it's fair to hold a fund one to the same standard as a fund four if you have an emerging manager carve out where you're doing this. For
Sure.
most folks, though, emerging managers is side of desk, most LPs. It's a side of desk thing. Maybe it's something they're personally really passionate about,
Hmm.
and they don't have the time to really take that nuanced approach. And so for fund ones, like you really do need to think through what does it look like out of fund four and have a game plan on how to get there as quickly as possible. I think like I think ILPA has some really great open resource materials around ODD and a few other things that are really helpful that I highly recommend for fund ones and fund twos to take a look at.
Sure. And you make a good point too. So when you talk about the firm, right, which is one of your pillars, really looking at their balance sheet and their income statement to kind of see what they're spending on, right? Because I think that'll really help you understand how they're responsibly managing the budget of the firm and, spending within their means to kind of deliver the most alpha, with the team that they're building essentially. So.
Yeah, exactly.
I've seen some funds. There's one or two funds that have come on the show before that have, retained support with culture building. So I think, really finding the right partner if there's two GPs and making sure that those people are going to be, really building a multi-decade franchise. So I think that's super important. So like, in your opinion, when it comes to culture, what are some of the things that have been excited about with some of the managers in terms of like how they're hiring, how they're building a team, and then, making it a repeatable platform?
Yeah, I think, yeah, first thing is just intentionality around it
Hmm.
and really understanding the people that you need to bring in at what time, right? Like you might not need a CFO early on in your
Sure.
career or in your firm's journey, and that is fine, but like you need
Yeah.
to know what those touch points are. For
Hmm.
culture though, that's a really interesting and fun question. I think for co-GPs, we're really looking at, can you two run a business together? Can you, quite frankly, like this is more than just a normal business. Like you're going to be around each other pretty frequently in very high stress, high, areas where you're having to make decisions very quickly and that really matter and have implications for a lot of different stakeholders that are going to potentially have different needs. Can you do that together? Can you do that productively? I think one of my favorite funds that we've invested in, they actually have a third party consultant that's uh, like a relationship therapist for the two of them to meet with monthly to talk through power dynamics, how they're thinking
Hmm.
through firm building. Are they checking each other appropriately? Are they holding each other accountable? And are they still finding joy working with each other? And I really appreciate that. I think that's a very fascinating approach. Obviously not everybody's going to have the time or resources in order to do that, but that was a really fascinating one. And to your point earlier around standing out, that definitely made them stand out in our mind.
Yeah.
Um, yeah, but culture is intentional. I think a lot of people don't think through, you have to be really thoughtful about what you want your internal vibe to be. And
Hmm.
nothing is wrong. It's just how are you then building that? And how do your systems and processes reinforce your culture? If you say you want a culture where people are going to be able to have contrarian viewpoints and really challenge each other, what's your IC structure going to be? How are your associates going to get to show up when you get to hire them? What are their roles and responsibilities going to be? So I think those are the fun conversations with GPs too, because then they get to start thinking big and they don't have to think about this immediate fundraise, but they start thinking about where this can go, which is really fun. But I would say, just in general for culture, the intentionality and also show how they're building relationships with you showcases a lot about how they're going to build relationships with their staff.
Yeah, no, I really agree. Well, maybe we can step out a second from just asset allocation, just talk about career, right? So, somebody that's kind of starting their career journey, what would you advise them in terms of trying to figure out what they really want to do? I mean, both of us have kind of made a couple slight pivots. So how do you think people should kind of think about that? And then, if it is a career in finance, what is some advice that you would give somebody if they wanted to kind of make that pivot?
Yeah. One of the best pieces of career advice I ever got was not what do you want to do? What do you
Hmm.
want, but what do you want your day to look like?
Sure.
Which was a fascinating
That
question.
is an interesting one.
Right? Because as somebody who's just been, I'm a very goal-oriented person. I never really thought through what I wanted my lifestyle to look like and what I value in my day.
Hmm.
And until then, too, as a student, right, your day is kind of determined for you. It's like, okay, you're at school from X to X, and in college, you get to pick maybe if you get to have classes after 10 a.m. But realistically, you haven't had much control over your schedule. And
Sure.
that was a really eye-opening moment for me. Like, oh, I actually like having variation in my day. I don't want to have a set schedule. And when I was thinking, after I did Teach for America, I was like, oh, am I going to apply to grad school for, business, or do I want to go and do another, get my master's in genetics? Um, I didn't want to spend my entire day with a set schedule of being in a lab from 9 to 5. And then when I started really looking at the lifestyle of investments and in finance, and there's a lot more variability, which I really love. And I love to
Hmm.
travel and I love meeting new people and experiencing things. That was really interesting. And then the other question that I heard really early on in my career was not what do you want to do, but what problems do you want to solve? What
Hmm.
problems get you excited? And so I think going into career journey with those two mindsets of what do I want my lifestyle to look like? And then what do I want to do? Like, what are the things that I feel like are fun problems that I can help to solve? um, and not being afraid to pivot when those things aren't serving you. And it's really scary. I don't know what your experience was with career switching, Joel, but for me it was hard, right? It's
Yeah.
a lot of self-reflection. It's a lot of vulnerability as you're going through and you're learning things about yourself, and you're trying to upskill really quickly.
Sure.
But I think the things in life that are hard are the things that are worth doing.
I totally agree. And then I wanted to add something in terms of how you think about how you spend your time, So this is kind of funny and you might laugh, but like when you go to events or when you meet people, I try to never ask people like, what do you do? I just kind of, I come up with something else, but that's kind of probably like one of the worst things to say when you first meet somebody. But I saw something in my feed, I think a couple weeks ago, which was like, an alternative is just maybe ask somebody what they really like about what they do or what they really enjoy, because that might be a little bit of a pattern interrupt, and it'll actually have people maybe build more of a closeness to you because they're actually taking a moment to actually reflect on what they really like. And maybe when they do that, they actually realize that they're not doing what they like, and it helps them kind of open more to kind of have something to talk about versus kind of transactionally just saying, "Hey, this is what I do." Well, oh, well, what do you do? And you're kind of like sizing somebody up versus kind of opening up about what you really enjoy doing. So I think that was one piece, which kind of dovetails into what you were saying. And then I want to learn a little more about Teach for America. So tell us a little more about the organization and maybe some things that you learned, kind of working there.
Yeah, so TFA is or Teach for America is a national organization that's really trying to help to alleviate the opportunity gap for students in the US, starting with K-12 education. I actually think now they might be doing some early childhood, but I haven't been with the organization for quite a
Sure.
while. Yeah, and they do a couple of different things, but my role within that was to act as a core member. So I was trained as a secondary high school teacher, teaching STEM. And, I think there's a lot of really great things that I got out of that experience. The biggest things are one, an appreciation for how hard it is to be a teacher.
Hmm.
I look to the point around like what you want your day to look like. I really admire career teachers that have stayed in that environment, and you're on all day long, you're public
Hmm.
speaking, quite frankly you're like a performer trying to get students excited and energized
Sure.
about the content, and you're doing a lot of work outside of what the students see themselves. So
Yeah.
it's a lot of really hard work. Teachers are criminally underpaid, and it's the hardest thing I've ever done in my life and may ever will do. But the things I got out of it were a lot of joy, and I got my worldview challenged. I met a lot of young folks that had lived a very different life from me in a really great way, and just their vulnerability and willingness to share their communities, their families with me, was invaluable and really joyful.
Hmm.
And on the more technical side of things, stakeholder management is so much of what I do as an LP. And I learned how to really quickly pivot and how to think on my feet and how to make sure I'm able to give the greatest number of people what they need the quickest, and able to tailor messages to make sure that everybody feels a shared sense of understanding and community. And I don't know if I would have gotten that in any other environment.
No, and you're hitting on an important point. So I think this industry, venture and private equity and just asset management, I always say this, there's not really a degree. Like you can't just go to college and learn venture capital. Like, and I wonder why they don't have that. But a lot of these people that are working in this industry, they come from different backgrounds. I come from like a hard tech, engineering background. You come from, a unique background as well. There was a person that was on our podcast a couple weeks ago. She was working in project management, and I was like, "Wow, you probably do a lot of project management right now as well, right? Because you're essentially managing stakeholders. There's timelines. You need to prioritize what you're working on." So I think the beauty of this industry is you really can come in with your superpowers, and then there's probably like a 25 to 30% hard skill factor where you definitely need to know how to write a memo, and you definitely need to know some specific things. You need to be able to look at data, and you need to be good with people. But like the other pieces, I feel like there's that magical part where like you can fill it in with just kind of who you are as a person and kind of use that to kind of maybe build an investment strategy, maybe come together around some type of thesis. So I think that's what I think is really exciting about just being an asset manager. And what I also think is interesting is just all the different industries and flavors of asset management as well, right? There's early stage, there's late stage, there's public markets, and there's so many different industries. So I believe you guys are invested across several different industries, several different stages. I guess so. Are there certain kind of founders or industries or, um, you know, tech sectors or non-tech sectors that you're kind of interested in recently?
Yeah, great question. We especially on the emerging manager side, which is where
Hmm.
I've been spending a lot of my time right now. We're stage and sector agnostic, so we're pretty happy to look at anybody.
Sure.
But right now, what I've really been focusing on is how we can create the most diversification within that group. So we do see a lot of pre-seed and seed for various
Hmm.
different reasons. I think one of the biggest things is that's just where a lot of entrepreneurial folks are, and who are risk takers who are willing to go out and start a fund. So
Sure. Yeah.
they gravitate to that really early stage, and that's where they can see their value. Yeah, so always looking for folks that are a little bit later stage. I think there's some really fun funds that are coming out now that are looking at that gap, right? Because we've seen a lot of
Hmm.
great managers that are starting, pre-seed up to Series A, but as we start to think about Series A through Series D, there's a pretty big gap there of the boutique, smaller VC firms,
Hmm.
and there are folks that are starting to fill that. So that's been really fun. That's been a fun industry trend that we've been looking and watching. Obviously, I think in terms of specific technology, AI, I don't know how we made it almost 40 minutes in a
I
podcast
know. And
episode
then
on
we didn't bring
AI.
up AI. Yeah, we
I
brought
know.
up proprietary deal flow though, so
Yeah, we
that was
did.
good.
And I'm not sure what that's going to look like yet. I think right now we're kind of seeing a proliferation of that across different businesses. We're seeing how it's being used to revolutionize and change current business models while also like being its own entity in itself. So just I don't know if anybody knows exactly what that's going to do, but it's going to cause major trends and changes in the sector, especially in venture. So we've been keeping an eye on that and trying to better understand. And also, on that end, one of the trends I am nervous about is the climate impact of AI. I don't know if enough people are
Hmm.
talking about that, but it's very
Sure.
carbon intensive. So just making sure we're better understanding the potential climate implications there.
Yeah, so I mean, we sit on a little bit of data too, just through the managers that come through our accelerator. So like, we just graduated our 10th cohort, and the ninth cohort that we had, there was a lot of AI, and then there was, maybe one fourth of that in healthcare.
Mm.
Maybe a couple quarters before that, I saw a lot of climate infrastructure. So it's kind of really interesting to see just, and this is just a sample set of people that apply to our program, right? This does not really represent the entire market and, which type of managers are, coming into market, but it's just kind of the weird, data that I can look at and just kind of try to derive some insights from. But that's what, and then this cohort, it was just a lot of B2B SaaS and some pre-seed. I didn't really see a lot of healthcare. There was like one insure tech fund, and then just a lot of just, hey, we're doing pre-seed, and that's just, cascades out to like B2B SaaS and AI. So after a while, I mean, the challenge for allocators and including me is just, after a while, it's, people are probably going to be mad for me saying this, but like a lot of people start looking the same after a while. So I think what you can really lean on is really just kind of your instincts and that relationship that you build, and maybe you hold on to that because it's like, look, you know what, I want to actually go on this journey with this person, and to your point, having the compassion, the empathy, and um, just wanting to actually just back this person and work with this person.
Yeah, totally. No, and I think I wanted to double click on the point you made around people starting to look the same. The differentiation is really hard. It is
Mhm.
challenging. I really feel for both GPs and LPs on that side of things of how do you adapt your storytelling of how you're creating the narrative of your firm in real time. When we look at pitch decks all day of funds. So I start to see the pattern recognition, you see the similarities, the differences. But GPs aren't quite getting that quick turnaround on seeing how many things are out there. So it is really hard, and I really feel for that. And I do think that's part of the long-term relationship building is a differentiator in itself, because I get to know you as a person versus the slide deck. There's only so much that can happen there.
Yeah, what I love about you and I is, look, you were an educator, right? You were a teacher, and I have a PhD, so we actually own an education company. So education is our core in terms of kind of like the platform that we're building. And what I truly believe is, as you're trying to build relationships with LPs, part of that is education, especially if you're in like a sector that maybe the LP doesn't really know much about. So I truly feel like that's really part of like a unique strategy. If you're good at like, getting some people together and actually teaching them something. It doesn't need to be a lecture, but just teaching them about your fund strategy or maybe this market. Like, why is cyber a hot sector? Well, hey, well, this sector has been at risk for, 2 trillion, and I'm just making these numbers up, but like, hey, this sector has been, responsible for like $2 trillion worth of losses. So that's why this is a big opportunity, right? So like, oh, I didn't know that. So like that maybe makes somebody lean in. So, I'm assuming you feel the same way just as an educator as well. That just helps people maybe just, take a meeting and get to know you better. But what are some pieces of advice that you would have for managers to kind of just build these relationships and, at least try to attract LPs to come into the room and maybe learn something? Because there's just so many events, right? There's so many different people. There's so many different conferences. So, um, you know, what do you think works? And, you're probably hearing a lot of this from the managers as well as they're struggling to build these kind of relationships. So.
Yeah, it's hard and can be very expensive. All
Mhm.
these events have price tags and, the travel and, obviously the time cost of going to all these things, but
On
also
both
offers,
sides too, for you guys as
exactly.
well.
Yeah,
Yeah.
definitely.
Hmm.
I think, if you already have a current LP base, leverage them, know which LPs are really active and want to be helpful. We have quarterly check-ins at a minimum with all of our GPs, but we send out our quarterly travel list of things that we're going to be at. We send a list of all the conferences that we've seen that people have recommended and kind of benchmark them against each other and send that list out to our GPs so they know which ones at least we think are the most valuable or the ones that we'll be at. So that can also be helpful if we're in the room and there's an LP only breakfast or whatever, those are
Hmm.
different conversations that are happening. Um, so I think I would say the first thing is like leverage your LPs or your co-GP networks. People know which ones are the most value add. And then, hosting events if you can, there's lots of people that are willing to sponsor events, things like that, or even just small dinners or even just a lunch or a coffee. All those things matter depending on where you are. We're in Philly, so if people are in Philly and stop by for, we're right next to the train station, shameless plug. But it's
Hmm.
always nice when people stop in. It makes, it's a really nice casual way to get to know people, maybe not in a more pressured, GP LP match type situation.
Hmm.
But yeah, I think, don't be afraid to ask. It's people want to be helpful is the thing I've
Yeah.
noticed the most across all, but especially the emerging manager and in venture, I think as an asset class is very collaborative. So the more you just ask, the more you plug in, the more, podcasts you're listening to, you just pick up little bits and pieces and figure out who your community is, and then you can kind of help to prioritize those things.
Yeah, that's helpful. What advice would you give somebody that's getting started, that maybe wants to just, maybe they exited from a tech company and they're trying to figure out if they should start a fund. Where do you think they should start?
Yeah. Oh, what a difficult question.
Well, maybe to help, and sorry to throw these at you, but like
I love to
maybe to
talk.
help, maybe it's like why? It's like, why do you want to start a fund, right? Maybe that's kind of the start, but then from there it's like, um, you know, is it worth is it kind of like what you said, right? Is it what you really want to do day to day, right? So,
Yeah, I think that's where I would start is do
yeah.
some just informational interviews with GPs. It is a
Mm-hmm.
really hard job. I don't know if how many people realize how it's such a challenging, it's such a rewarding, but such a challenging role to play. And
It is.
you're stuck between LP and founder constantly. You're on the road a lot. It's a really all-encompassing job. So
Mm-hmm.
just making sure that you really want to be on that ride. It's a beautiful thing, and the people who do it well and are really passionate and talented about it are some of the best professionals I've ever met in my life. But it's really hard work. So make sure you want to do that and that you want to be in it for the long haul because it's
Mm-hmm.
not like you can exit, in a couple of years or anything like this is at least a decade that you're going to
Sure.
be doing some type of stewardship of these assets at a minimum. So I'd start there. And then from there, there's so many great things out there now. There's, your organization, there's so many ecosystem builders out there that are doing really great work. There's lots of literature, there's podcasts now. So I would just kind of go into absorbing mode and trying to figure out as much consumption that you can find through informational interviews, media, books, all those types of things. But once you kind of get through that stage and you've decided this is the pathway you for sure want to go down, strong portfolio construction and really great storytelling are going to be the things that are going to make you stand out in the current competitive market.
You talked about, traveling and, going to events. So, what do you think is the DNA for a good AGM? You probably go to a bunch of AGMs. There's probably some that were maybe disorganized. Maybe there were some that were really, put together really well. So I guess, as far as format, just for managers as they're maybe doing their first AGM, any tips? Should it be a 1 day thing? Should it be I'm assuming you want to make part of it virtual as well, so like maybe some LPs that can't fly in, they can at least dial in. So any like advice on in terms of like the logistics or like the formatting, 2 days, 1 day, half a day, all of the above, whatever whatever you recommend.
Yeah, what a great question. And actually, very well timed. We actually just did a write up for one of our GPs asked for it. We're like, oh, this is actually just great for all of our GPs. So we
Hmm.
did a write up of things that we've seen at AGMs that we loved and that we thought were best practices. I'd say the first thing is just make sure it's your vibe. Like,
Hmm.
these are very personal things. This is you showcasing something that is a very big part of your life. Like, make sure it fits your personality and to the things we were talking about earlier. It's the culture of your firm, right? These are going to look
Yeah,
very different, and that's okay. And then also know what your goals are for your AGM and where you're at in your fund and your firm life cycle. If you're actively fundraising, this could be a great opportunity to invite external LPs and GPs in for portions. So just like being really thoughtful about the goals and objectives for this AGM this year. And then like don't think through it as one event. I kind of think of through it as multiple. Right, there's
sure.
your current LP engagement and also doing your fiduciary responsibility of showcasing what you've been doing with capital for the last year. And then there's also if you are taking the network building approach and ecosystem building approach, there's lots of things you can do around that.
Sure.
I think, the ones that I've seen that have the most successful attendance and engagement usually do some type of happy hour or dinner the evening before, and then have a full day of activities, more formal programming the second day. And then, some people even tack on if you're in a cool location, like one of our funds has a ski trip option on the day after, things like that. If you happen to have some beautiful nature in your backyard, that's always fun. But yeah, so I think kind of make it your own. Make sure it fits the culture of your firm and the brand that you're trying to build, and being really thoughtful about your goals and objectives and making sure at a minimum you're engaging your current LP base, but then how are you building
Hmm.
out your firm?
Sure. And there could be some partitions as well, where like maybe there's a portion for just the existing LPs, just to kind of share some of that more granular performance data that you may not want to present out.
Oh, totally. Sorry.
Yeah.
Yeah, thank you for clarifying. Yeah, those ones
Yeah.
they've usually done like the morning and afternoon
Hmm.
for private,
Sure.
like only within the current LP base. And in the afternoon, they've brought in a few of or in the afternoon, evening founders and then done an ecosystem building event that's a little bit
Sure.
broader. Yeah.
I've seen also in some of these, I think it's also important to be super transparent in terms of your challenges as well, right? So, I've seen some really great AGMs where like they share kind of like the struggles that they had, some challenges that they had, but then they also showed like pretty much like the Y Combinator founder summary, right? Like you got the highlights and then you got the lowlights, and then hey, this is what you're doing about the lowlights. And then, the obviously the, how the performance is doing. And then if you're thinking about like a fund too, maybe that's an interesting point too, like how you're thinking about what maybe the next vintage could look like. And maybe if you're going to stay in this, and that's something to judge too. Are they sticking to the exact same strategy? So I've seen a few managers that had the exact same fund size for fund two. And it's just, they're a solo GP and that's just what works for them. And, that's a repeatable model, right? But, yeah, I guess what are your thoughts on that in terms of what do you look for when people, or what do you observe when people are kind of starting to talk about the next fund? I'm assuming if it's like, a $20 million fund and then the next fund is like $180 million fund, that might raise a bunch of eyebrows, right? So maybe just some thoughts on how people are communicating the next fund strategy and how they graduate into that.
Yeah. It's very different, that we do
Hmm.
see some funds that are like, this is our target AUM, it's never going to be above X, and this is where our niche is, and this is where we generate alpha, and this is where we feel really comfortable, and that's awesome. Like that's totally
Sure.
fine, that's great. So those AGMs is like, yep, we're rocking and rolling, we're going to be raising again, doing X, Y, and Z. Maybe they're bringing in another, associate or something like that, but overall, like pretty consistent. I'd say for the majority of emerging managers, especially in the difficult fundraising market, you are seeing, the idea that they're hoping to scale up their AUM as the fund grows. Um, and with that, we're pretty active, so we have lots of conversations with our GPs. So hopefully we're able to provide feedback and thoughts on that. I don't have a problem, obviously major jumps up in AUM. I have concerns about that, but if it seems
Hmm.
like you're scaling and your firm is growing, that to me makes a lot of sense.
Yeah.
The questions that I then add on to that are, what are you thinking about ownership, initial ownership versus terminal, and then what's your follow-on strategy? Is that materially changing, or are you doing the same strategy just with more checks, like, more
Hmm.
investments, or are you actually changing and playing with those things? And if so, why? And, for a lot of people, it might be that's actually what they were intending to do in the first place. And 2023 was really brutal. And so now they're hitting, trying to make sure that they're hitting their current AUM where they wanted to be.
I would say too, this came up last yesterday, I mean, just kind of feedback on the deck. Like some of the ways that you format the deck, just the layout of the text kind of makes a difference too. So there is a manager that's, really focused on Fund 2 now. He's already actively deploying on Fund 2, but like the format of the slide, like it had the it had like the an announcement that Fund 2 is happening, but then he said, "Hey, this is how our current deals are doing. These are our two best deals." But it looked confusing because it was all on like one row. So it's like, this is our bet. These are two of our winners, and then this is our fund two. And it looked like the fund two block looked like it was part of like the first fund. So I think just some basic things like that in terms of like just laying out the information, that's something that I learned could just be a quick win in terms of just tweaking how people are like looking at the deck. So I don't know if you had any instances where you coach somebody on just kind of the layout of how they, provided their messaging or like maybe the formatting of the deck. Team sometimes is a big one too, because there's like, 10 advisors on one slide. And it gets confusing, like who's the actual, team members versus venture partners. I don't know if you have any nuggets of wisdom on just kind of collateral and like just things that work and things that could be confusing.
The first piece of advice I have is making sure the important information is up front. The number of times you have to dig to figure out what's the fund size is pretty shocking. So, make
Hmm.
sure that those really important hallmark numbers that are going to be the most critical to LPs are easily available and are in early on in the deck. Yeah, I'd say just like general advice is think through who's your audience. You've got folks that have looked through lots of decks. They might be looking through 10, 15 today. What are the questions that they want to be able to answer quickly? And then once you've piqued their interest, what are the things then you draw them in with? And go through with that mindset when you're designing. Yeah, and being really clear, especially if you are on a later fund, being really clear about what is the current ask and then what is the firm's performance, to your point, Joel, is really important. Better understanding like, oh, are you currently investing out of this fund, or is it,
Hmm.
those types of things. I think that's probably like the biggest piece. The other thing is if you have venture partners, make sure you're really understanding how they're evaluating their track record in their portfolio. A lot of the companies they probably angel invested in are in some of the LPs funds. So just making sure that
Hmm.
you're keeping an eye on all those types of small details because people will, like dig into those hopefully if they're really
Sure.
reviewing.
One other thing that I noticed in the last cohort was there was a couple funds that actually were able to showcase some DPI, coming into fund two. And then there was a couple conversations that I had with a couple managers that had an option to put some darts on the board. And I was just like, look, do what you need to do. But I think, look, if you can showcase a couple, even a small decimal point or two on DPI, it's definitely worth showcasing. And, it's definitely worth kind of, being able to put those darts on the board because other people are, right? So I think, I don't know if you've been seeing that as well, but like some people are really trying to show that they're able to return money to their investors, even in the earlier stages as well. Even if they got a couple wins on their portfolio construction, not only trying to shoot for that, but also just call that out, right? Half of it is really just communicating it. So I don't know if you've been seeing any managers in the early stage that have been kind of showcasing that, and if so, what are your thoughts on that?
Yeah, we've seen some, and
Hmm.
DPI is great.
Yeah,
So there's ways to do it tactfully. I think that's awesome. I do want to push LPs though on, it's a tough market thing.
hmm,
Most of these are going to be DPI is elusive right now. And so if you're seeing it,
exactly.
great, but I don't think it's I don't think that some of the best funds out there are going to have it, and that's okay. And we need to get really creative about how we're underwriting and what are other metrics of success that we're looking for if you are starting to dig in. We've been doing a lot in our underwriting of, what is the cash situation of the company? What's their cash runway? What's their burn rate? Like really looking at those types of metrics for company success. And it's been really fascinating. We've got some, I think, awesome portfolios, companies in our portfolios, but they were extremely cash efficient and they haven't
Mm-hmm.
raised. So there's been no price rounds in a little bit, but they're killing it.
Oh,
And
wow.
they're not in a position where they want to sell right now, and that's okay. So I think you do have to be a little bit more active on the asset management, the portfolio management, if you really want to see where some of your bigger winners are going to be right now.
There's one more stat. So there was, a fund that kind of showcased two like hot deals, and they showed like one number, and then they showed the second number. And if I like do the division, I'm like, wow, this is like a pretty big multiple. But like the multiple that they showed was a lower number, and like that was accounting for dilution. So again, like if you can kind of like list an annotation there that says, oh, this is factoring in dilution, but hey, this is what it, really is. But our numbers are actually less because of this. I think that's also great too, because to your point, sometimes people are trying to do what they can do to kind of position themselves in the best way, but then if you're an amateur, it may just sound like you're inflating the numbers, right? Instead of kind of like putting some thought around the communication to not sound like you're overselling, I would say. So cool. Well, we got 4 more minutes, maybe just, we can wrap up with just a couple final pieces of advice, maybe just in terms of like your career, maybe just a mentor that meet with once in a while, like maybe just pieces of advice from people that you're learning from.
I've had the honor of having a lot of really great mentors and coaches throughout my career. And, I think that might be just one of the biggest pieces of advice I have,
Hmm.
especially for
Yeah.
women that are wanting to work in this asset classes. Find your allies, your coaches that are going to amplify you and, talk you up when you're not in the room. I think that's like a really big piece of career advice for really anyone.
Hmm.
It makes a huge difference. But I am really lucky. My CIO right now, Margot Kane, she's absolutely fantastic, mentor, coach, boss. And I really get a lot of value from working with her. And the biggest piece of advice that I've gotten from her is just honesty is kindness. So being really clear, and this I think goes for anybody who's allocating, or investing if you're a GP and LP, being really clear and firm on what you want to say and like making sure that you're articulating where you're at in your processes and your systems. And then also just something else that she told me really early on in starting at Spring Point, which I love, and also is how I like to show up in the work, is just trying to figure out how you can be helpful to people. It's a collaborative asset class, and these relationships are really long. And also, you just get to know people in different ways when you're creating mutual value for each other, and it helps to build stronger relationships. So, build relationships. Say what you need to say in a kind and thoughtful way, and being clearly articulate on it, and find great people who will help to empower you.
Well, hey Sabrina, this was amazing. Thanks for taking all the time out to share everything about your journey and about how we can all be better investors. And you've got great mentors, so happy to take away all those nuggets for my own learning. And I know the community really appreciates it. So thanks for all that you do, and I appreciate the friendship as well.
Yeah, right back at you, Joel. Thank you for all the ecosystem building that you're doing. It's just such a great joy to be part of this. And thanks so much for the time.
Yeah.